right, another day for stocks is here, and we have to break down 5 in particular that I'm watching right now, all of which just reported earnings. So we have to break down earnings, the charts, what I'm doing, and we'll cover the indexes, which right now, guys, they're slowly flipping green. We're up across the board except for the Russell now. The Russell's still down a little bit, but we're up on the other 3 indexes. So we have a lot to cover, guys, a lot to cover. Hit the like button. Do not forget to subscribe. Join the Patreon and the free email stock newsletter. That is linked down below. And of course, take a sip of your coffee. You're going to need it for this video. And let's dive into it. Oh, by the way, cheers, guys. I appreciate you all for tuning in. As always, let's talk about what's going on. So, like I said, we are now flipping green on the S&P and the Dow. QQQ is now back in the red. It was slightly green 30 seconds ago. Now we're back in the red, and you can clearly see momentum is building up. You're noticing this is SPY, by the way, the S&P 500. It is clearly building up on the intraday chart. We were chopping around in the first hour of trading, hour and a half. Now, over the last 30 minutes of trading, we've picked distinct direction, which is obviously to the upside, right? The bulls are loving this. We're starting to build up some momentum, and we sold off a lot of the pre-market. Pre-market, we had a lot of selling. Then we started picking up, into open. Stocks started to pick up, and then obviously we chopped around at open for the first hour of trading, and now we're starting to really break out on SPY, and you're noticing that on QQQ as well. Let me pull it up and show you guys. We saw some selling in the pre-market, started to pick up heading into open, then we chopped around after open. Now over the last 30 minutes, we've been starting to break out. Even though QQQ is slightly red, we're obviously heading in the right direction. Pretty clear based on this intraday chart. So, yeah, man, we're starting to go green, which is good. And on the 1 hour time frame, obviously, bulls are still in charge on QQQ, on SPY. There's no denying that. I mean, they're very much in charge at this point. And SPY 590 is the next spot of resistance worth watching. 589, 590. This is resistance from the last 2 days of trading. We hit this spot on Tuesday, yesterday on Wednesday as well. If we're able to break that on SPY, 590 plus, it could really start breaking out even further from that point. And you guys can see on the 4 hour time frame, we're getting, it's crazy to say, but we're getting closer and closer to all-time highs, are we not? This is wild. So we've recovered all the losses from April and some, and now we're 20 points away from all-time highs on SPY, and QQQ obviously is looking great as well. Recovered all the losses from April, and this is about 20 points away from all-time highs as well, or about 3 to 4 percentage points. Think about that, guys. Think about that. So we're looking great on, the indexes. Stocks are starting to go green today. On the intraday, you saw that, which is great. And we still have a couple hours, many hours of trading left. So, with the way things are looking right now, we might really start to go green in the second half of the day. We shall see. Of course, we'll do more updates, so make sure to subscribe, follow along for more content. Now, let's get into these earnings. Let's break down these companies that reported earnings. I think all of these, except for one, reported today, or maybe 2 of them were yesterday. Either way, Walmart is number 1. WMT is the ticker for those that don't know, and their stock's down 1.4% as of this video. And Walmart, let's see, they reported earnings per share of 61 cents adjusted, by the way, versus the 58 cents expected on sales of $165.61 billion, which missed the 165.88 billion expected. So beat EPS, slight miss on sales. Looks like they see Q2 sales of 173.67 versus 175.35 billion, or to 175.35 billion versus 175.21 billion expected from analysts. So Q2 sales on the lower end of that range is under the estimate. Not the best, I guess, but obviously not the end of the world either by any means. Looks like they affirmed their full year 26 adjusted EPS guidance and their full year 26 sales guidance of, oh my God, around $701 billion, which that came in under the $705 billion that analysts are expecting for full year sales. But think about that, man, $700 billion in sales. Oh my God, it's only a matter of time before we get to $1 trillion of sales. You know, Walmart might be the first company that does that. We shall see. So, yeah, man, earnings were okay. Guidance, not the best at all. And the stock is selling off because of that. We're down 1.3% on the day, but we actually got down to $91. So we were down at one point over 5-6%. And the funny thing is, we popped initially after earnings came out, but clearly that did not hold. So we ran to $100. That didn't hold. Now we have a clear head and shoulders in the making on this 1 year, 1 day chart, which is not ideal. Not ideal for the bulls. This head and shoulders, and the fact that we got rejected at $96, $7, $8, the neckline of the head and shoulders, that is not the best look here on Walmart. But hey, at the end of the day, it is fighting to hold above this 180 SMA, which we'll see if we hold that moving forward. $93, $95. We're holding it on the 4-hour chart. Let's see if that continues. So Walmart, that's their earnings. We also got Alibaba this morning, which their stock's down 7-8%, not looking the best. So Alibaba reported adjusted earnings per share of $1.73, which missed the $12.94 expected. This has to be, what's it called? A typo, because it says here sales $32.58 billion versus $237 billion expected. Yeah, that's definitely a typo there, or at least the estimates are typos, but it looks like they did adjusted EPS of $1.73, sales $32.58 $1 billion. Yeah, it looks like they didn't convert the estimate to U.S. dollars. It looks like it's still in renminbi, Chinese renminbi. I can't even say that. But either way, looks like they declared a $2 per ADS dividend. Looks like including a 95-cent one-time payout from asset sales, blah, blah, blah. Anything on guidance? Not seeing anything on guidance, but yeah. Looks like, okay, yeah, they fixed it here. It says $1.73 EPS versus $1.74 expected in U.S. dollars, so that missed. I'm not sure about the sales, though. Either way, the stock's selling off. You know, we ripped like no other a couple months ago. We went from $80 to $150, then back down to $95. Then we rallied over the last couple of weeks from $95 to about $135. Now we're selling off to $123, down about $10, $11, 7-8% right now. So let's see if Alibaba can find some sort of support. Maybe at 118, 120, 122, this $4 or $5 window, right above this 180 SMA, where we are now. Let's see if we can find some sort of support there for Alibaba. Let's continue on here. Let's see. The next stock is Cisco. By the way, guys, hit the like button on this video. Make sure to subscribe. Follow along for more content. I appreciate all your support as always. So Cisco Systems reported earnings, and their stock's up over 6%, looking very good here on the day, guys. So Cisco reported yesterday, and they did EPS of, let's see, adjusted 96 cents, which beat the 92 cents expected on sales of $14.15 billion versus $14.08 billion expected. So double beat for Cisco, and they got it for Q4 revenue of $14.5 to $14.7 billion versus $14.5 billion expected. They see Q4 GAAP EPS of 62 to 67 cents versus 63 cents expected. So pretty good guidance and a double beat for Cisco, which is why clearly the stock is starting to move. And it was already breaking out heading into earnings. We were already above the moving averages, already above the highs from the end of March. But now we're just simply extending those gains. And now, hey, it looks like we're about to take out $67, which is that the all-time high? Oh, no, it's not, guys. No, it's not. I just realized, I forgot that Cisco still hasn't taken out the highs from the dot-com bubble yet, which is, it's insane just saying that out loud. Cisco stock has not taken out the dot-com bubble highs yet. Think about that. That was 25 years ago, guys, at this point, a quarter century ago. But we won't dog on Cisco too much. I mean, it still made a great investment. If you bought it in 02 at $10 a share, I mean, now it's at $65. That's a great investment over 25 years. But if you bought it, obviously, at $65 back in the dot-com bubble, it wouldn't be a good investment. So, you could have bought Cisco in 2000. It would have been an awful investment. But in 2002, if you held it till now, it would have been a great investment. So it's like, okay, price is what you pay, value is what you get. You could buy a great company at an awful price, great company at a great price. And that's what determines whether your investment will be good or bad. You can buy a great company, but if you buy it at a bad price, you're in trouble. But if you buy it at the right price, at a good price, you're going to do well. And that's clearly what we're seeing here on Cisco. And it's wild that we haven't taken out the highs yet from 25 years ago. But here we are. I'm pretty sure Intel is in the same boat, right? Yeah, Intel's in the same boat. This one was at $75 in the dot-com bubble, and now Intel's at $21 a share. Think about that. It's down 75% over the last 25 years. Unbelievable, right? Excuse me. So let's continue on here. Let's do two more. John Deere, or also known as Deere & Company. I call them John Deere. This stock's up over 5% on the day. John Deere reported earnings per share of $6.64, which beat the $5.59 expected, which that's great. Sales came in at 12.76, which also beat the $10.79 billion expected. So double beat for Deere & Company. Anything on guidance? Not seeing anything there, but the fact that, hey, they double beat. Actually, wait, they expect full year 25 net income of $4.75 to $5.5 billion. Not bad. So, hey, that's all it takes to send the stock higher, up 5%. We're taking out the highs now from the middle of February, which is nuts. And now, are we at an all-time high? Oh, man, yes, we are. Deere & Company, John Deere, just hit an all-time high. I don't own the stock, but if you own the stock, you're looking good. You're looking good right now. And anybody that bought the dip back in April, they're sitting pretty. They're sitting pretty at this point. So DE is breaking out, and we also had Coreweave report earnings. You guys remember them. They IPO'd not too long ago, a couple weeks ago or months. I forget exactly. Not months. I mean, it hasn't been that long. About a month and a half ago they IPO'd. So Coreweave, they reported earnings, and it looks like they did, where are you? Come on. GAAP EPS, they lost $1.49 on the quarter. Sales came in at $981 million versus $859 million expected. So they destroyed sales. Again, they lost on an adjusted basis, 59 cents EPS. That missed the loss of 12 cents expected. So they lost more money than expected. But the fact that sales destroyed by over $100 million, that's pushing the stock higher. I mean, that's all it takes to push a growth company higher, as if their revenue is better than expected, if they're growing more than expected. And that's what we're seeing here with Coreweave, and boom, we're taking off. So keep your eyes on it. CRWV, it's up a lot from IPO, guys. Keep that in mind, but it looks like momentum is not slowing down. So let me know your thoughts in the comments. Hit the like button. Don't forget to subscribe. Join the Patreon if you want to see what I'm doing in my portfolio. Every week I'm posting updates. Excuse me for that, guys. And we're investing thousands of dollars a month on Patreon. That is linked down below. And with that being said, cheers. I'll catch you in the next video.